Hello, 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 and welcome back to another episode of Freedom Ain't Free. A lot of my clients are asking me, what stock market opportunity should I swing at right now? In this video, we're going to be discussing why adding the direct indexing strategy to your overall portfolio might make sense for you. If this is your first time with us on the Freedom Ain't Free channel, we're here to give you the wisdom, the knowledge, and the understanding of all of the available financial tools that are out there in the marketplace to help you get to a state that we like to call financial freedom. Freedom to pursue the things that you want to do. Freedom to go to the places that you want to go. Freedom to have control over your time and ultimately buy back your life. Maybe you're tired of being in a position where somebody else is dictating to you what you have to do every single solitary day, and you want out of the rat race. Well, the Freedom Ain't Free channel is designed for you. We're going to give you a deep dive into every tool that you could possibly use to get yourself free. How do we define freedom? $2 million in investable assets. I get an 8% return. On my $2 million, I've got $160,000 a year in income coming in. Year in and year out, and I have bought back my freedom. My name is Joel Huey. I'm the principal at ARC Financial Strategies, and our objectives at ARC is predicting the rain doesn't count, building the ARC does. We typically work with clients we like to refer to as Henrys. High earners, not rich yet. You figured out how to make money. You figured out how to get your income up above your standard of living. You've maximized a lot of your other investment strategies, or you're looking for other places that you can put strategies together to get you out of the rat race. At ARC Financial Strategies, we provide you with a customizable plan to help you accomplish those things. And we like to wrap that up by giving you what we refer to as your freedom number. It's how much money do I need to save and invest on an annual basis to get me to that $2 million portfolio. And we invite you to book a free session, 20 minutes, 30 minutes, to get yourself your freedom number, and then you'll know exactly how much money you need to save to get you to financial freedom. There's a link in the description that you can click on to book a free session with me or one of my advisors. So we're going to be talking today about the direct indexing strategy, and we always like to make sure that we don't misdefine what something is, and that way we misassign and we put it in a category where it doesn't really fit. So direct indexing is an investment strategy where individual stocks that make up an index are actually held directly in your client account. Instead of using mutual funds or ETFs like we talked about in our last episode, direct indexing mirrors or matches the target benchmark, which is the specific index, but allows you to hold the underlying equities directly, right? So you get to pick which individual companies that you're working with, what percentage of your index makes up that portfolio mix, and all of the advantages that go along with that. So today we're going to talk about the advantages of having direct indexing as part of your portfolio. We're going to talk about some of the cons within this strategy as well. But I think there are more positive pieces of the puzzle than there are negative pieces of the puzzle. But, you know, it's for you to decide where this fits in your overall portfolio. So here's some of the main benefits of working in a direct indexing strategy. So the one you're going to hear about the most, people are going to talk about the most, is the tax savings, right? So I like to explain things in a way that you know, us regular people can understand it, right? So you bought a stock, you sold the stock, right? You either made money or you lost money. That's the end of the understanding, right? If you lost money in a direct indexing strategy, you would get an opportunity to write off the loss against a gain. That is it in its simple terms, right? So that's what tax loss harvesting is all about, right? So inside of a mutual fund, we talked about in the last episode of you owning a piece of the entire world. But in a mutual fund strategy, you don't own the underlying stocks. You own a share or a unit of the mutual fund. And when the mutual fund makes a profit, you earn your part of that profit. But the mutual fund company themselves is actually getting harvesting the losses. You are earned based upon the value of the fund going up, or you lose based upon the value of the fund going down. Here, direct indexing, you get all of the advantages of the tax savings. Now, if you don't have a considerable amount of capital gains to write off your capital losses against, the tax harvesting part of direct indexing is not a big advantage to you. It's not something that you necessarily need to run out and put all of your money in. But if you're a Henry, high earner, not rich yet, we're always looking for ways to reduce our overall tax bill. And if I can write off my bad choices in the stock picking, then that's a great strategy for me. So the second thing, you get to do what is referred to as proxy voting, right? So proxy voting means you actually own a fraction or a share of a company. Therefore, you get to decide, along with all of the other investors in that company, who runs the company. And one of the big things about investing, specifically in direct indexing, is you actually get to pick the underlying stocks, the individual companies that you are investing in. And one of the best investment strategies is investing in companies that you know something about, you believe in, and part of that is believing in the leadership of the company. So one of the cons to direct indexing is you got to do some research. You got to do some homework, right? You got to understand why you want to invest in a particular company and or when it's time to get out, right? So there's more work involved on your end of the spectrum with direct indexing, but all of the benefits come to you as well from the choices that you make. So having the ability to pick the sector that you want to be in. Do you want to be in healthcare? Do you want to be in technology? Do you want to be in energy, right? And then what percentages within those sectors do you want to be heavily in one company or another? Maybe you prefer the strategies that Exxon has over the strategies that Mobil has. Maybe you prefer to focus your attention on companies like Google versus a company like Amazon, right? And so if you get to go through, look at the strategy, look at the individual underlying stocks, and decide where you want to focus the bulk of your investing dollars. And the advantage behind that for a high earner is that I have an opportunity to grow my portfolio based upon things that I know something about. And I always recommend to my investors, invest in places where you know something about. Those are companies that you're going to follow more closely, and those are the better decisions you're going to make long term. You're not going to get swayed when somebody calls to tell you about a great new thing that's going to happen, that's going to turn you into a quadzillionaire overnight. When you have a good understanding that, you know, Procter & Gamble is going to be here today and tomorrow and in the future. So the second advantage is you get to participate in deciding who runs the companies that you believe in. And the third thing, and the most important aspect, I believe, in direct indexing, the benefits that you get the most out of the strategy in and of itself is you get to take full advantage of the winners every year, right? So inside of your mutual fund investing strategy, you get to take advantage of the averages, right? So there's the ups and the downs, and they come together and give you an overall performance. But here in direct indexing, you get to move around as you see fit on a daily, monthly, weekly, quarterly, annual basis in order for you to take advantage of the pieces of the puzzle, the areas in the strategy that make most sense to you, or things that are currently going on in the market. And you can push and drive those decisions in your own life with you steering the boat. Or if you're working closely with an advisor, your advisor's giving you the insight, the knowledge, the information. And what you want your advisor to be doing is researching these companies and understanding what's going on with these companies and these firms and making these recommendations to you on when we move and when we stick and hold. Understanding direct indexing is not a get-rich-quick strategy. It is the complete opposite of that. It is a buy and hold strategy. Now, you can buy and hold for a short period of time or buy and hold for a long period of time. But if you're truly believing in the value of a company, if you're truly focused in on where that company is going long term, direct indexing is allowing you to buy fractional shares within that company that you believe in and build yourself an overall portfolio that is performing at a level that's getting you to the rate of return that you're looking for. What rate of return are you looking for? Great question, right? So here at the Freedom Ain't Free channel, we want to teach you. We want you to have the wisdom and knowledge and understanding of how all these strategies work and come together to make the portfolio for you to get you to that $2 million mark. So one of the things you need to know is the rule of 72. Rule of 72 says, how long is it going to take for my money to double? So if I had $10,000 and I invested it and I got a 1% return on my money, it's going to take 72 years for my $10,000 to become $20,000. If I got a 10% return on my money, it's going to take 7.2 years for my money to double. If I got a 20% return on my money's doubling every 3.6 years. And so when I look at my direct indexing strategy and I'm able to focus on a sector that I believe is growing, whether that's technology or the energy sector or whether that's a housing sector, right? I have an opportunity to put my ideas and my study and my knowledge into that particular sector. And if I can perform at the rate of return that I need in order to double my money, then this strategy should be a part of your portfolio. When you look at your overall portfolio, I recommend that you think about it in 3 different levels. I like to call them the diversification within a portfolio, right? And I believe diversification should be product-centered, not wrapped up in any individual investment strategy. So if you go back and watch my video on the 3 buckets of investing, you know there's taxable strategies, tax-deferred strategies, and tax-free strategies. In addition to that, there are my conservative strategies, my moderate strategies, and my aggressive strategies. Your direct indexing falls into your aggressive strategy. This is not where you want to be putting money that you need in case you have an emergency. Not where you want to be putting money that you're focusing your long-term retirement planning or your long-term strategies on. Not where you want to put this type of money. This is an aggressive part of your portfolio where you've already got your 6 months of reserves set to the side in a fund that's getting you between 4 and 5 or 4 and 6% return on your money. You've already got your moderate dollars in your moderate investment strategies where you have no market loss opportunities, no market loss consequences, but you have, an unlimited amount of up gain in the market, or you have a little bit of risk that you're taking by using mutual funds or ETF strategies where I'm spreading my risk around. I'm taking on a moderate level of risk. But here, I'm moving into my aggressive strategies. Maybe I'm looking at real estate opportunities or real estate investment trust, or here direct indexing where I'm going through and I'm cherry picking a group of particular companies that I believe are going to perform better than the market, right? And so if I'm performing better than the overall market, then this strategy is winning for me. And so you got to measure the amount of work and the cost for the strategy to make sure that you're getting out of this strategy everything that you need in order to reach financial freedom. And the goal is to develop that $2 million portfolio so that you can go and pursue life and do things that you enjoy. Not sitting in front of a computer trying to figure out which stocks do I buy and which stocks do I sell, hire a professional for that. You want to be free to go to your kid's baseball game. You want to be free to go to your daughter's dance recital. You want to be free to take your spouse on vacations that last longer than the weekend. We want to show you here at the Freedom Ain't Free channel how to accomplish that and how to put every single solitary tool that is available in the marketplace in your portfolio. We don't believe that there's one particular strategy that's going to get you there. We believe you need to have them all. So we wanted to cover today direct indexing. Once again, benefits, tax savings or tax harvesting is what it's referred to. Proxy voting, then of course you being able to pick the underlying securities and decide where you want to invest your money. Maybe you don't like the policies of a particular company and you don't want to invest in them. Maybe you don't like a current CEO and his personal beliefs, right? And you don't want to invest there. You got control. You get to make the decisions. And then, of course, you get to reap all of the benefits of your gains going up as well as the harvesting the losses on their way going down. The con to direct indexing is you either really need to hire a professional to help you with making these decisions, or you're going to need to carve out time to make these decisions and do this research so you're making the best choices and the best investments on a daily basis. Hopefully, we've helped you today understand direct indexing and the benefits that go along with this individual piece of the puzzle and strategy. Once again, we want to remind you, wisdom, knowledge, and understanding of every single solitary tool that is available. In our next episode, we're going to be talking about utilizing index strategies in an annuity format versus an index strategy in a universal life insurance program, and how you can benefit from having both of those pieces of the puzzle in your overall portfolio, what is the differences between the two, and how you can maximize. So make sure that you jump into the notes or description, because I'm going to give you a book that I recommend in there that will take you through direct indexing and give you all the ins and outs. We also want to encourage you, if you don't know your freedom number, if you're not sure how much money you need to save in order for you to be able to have the great retirement that you're looking for, if you're looking for strategies that's going to get you out of debt in 9 years or less without you spending any additional money, we want to encourage you, book a free session, get you a freedom number, get you a debt elimination plan, put yourself on the road to be able to enjoy your life and live the life the way you want and live your life on purpose. Thank you so much for joining us on today here at the Freedom Ain't Free channel. We'll see you in the next episode.